Thanks for joining me today. My name is Eric Brown, and I'm a portfolio manager with Graham Wealth Partners. Today, we're going to be talking about something interesting called the Capital Dividend Account, or the CDA account. And this is something specifically related to business owners, as it is for the Canadian-controlled private corporations, the CCPCs. So if you own a corporation, maybe this is something that you've heard of, your accountant talk about, maybe one of your other business professionals, a lawyer, insurance representative, or investment advisor. And I just want to give a basic description of what it is. It's a notional account, meaning it is not a bank account. It does not show up on your balance sheet. There might be notes on the financial statement mentioning it, but it isn't a line entry. So it's something that is kept track of usually by your accountant so that you know what's in the capital dividend account. And there are 4 things that are related to the capital dividend account and things that can create an entry in that CDA account. The first things are capital gains and losses. That would be the net value of those. So if you had a $10,000 capital gain and a $5,000 capital loss, a $5,000 net capital gain would be entered into your CDA account as an entry. The second thing is dividends received from another company. The third thing is gains and losses on the sale of some of your fixed assets. These two I'm not going to get into too much detail. If that's something that you want more information on, you can reach out or you can talk to your accountant about those. And then the last thing is the proceeds from a life insurance policy above and beyond the adjusted cost base, in excess of the adjusted cost base. And why this is important is because it allows money to come out of your corporation. It's part of CRA's policy of integration to make the tax payable on a personal basis versus a corporate basis to be similar. And if you have things that credit that capital dividend account, you are able to take it out on a tax-free basis into your personal name. The 2 things that I want to mention specifically, the most common thing that people are aware of that credit the capital dividend account is life insurance, which makes sense. Permanent life insurance lasts into the day you die, and the money above and beyond the ACB will then get paid out as a tax-free, to the shareholders. The second thing is capital gains and losses on your investment account. So if you have a capital gain, you're able to, a net capital gain after losses, you're able to take a portion of that out of your corporation on a tax-free basis. And that's very important to pay attention to, because if there are ways that you can convert interest income or dividend income or reduce those in your corporation and instead have capital gains, then that gives you a tax advantage feature because you're now able to take it out of your corporation. If this is something you want to talk more about and how that relates to your personal investment portfolio, I'd be happy to chat. We can also look at any details related to an insurance policy, one that you currently own or one that you're thinking about owning, and how that relates to the capital dividend account and the advantages that are available to you. Feel free to reach out and book a meeting. Look forward to hearing from you.